Okay, so like the S&P 500, it's on track for like what, a 24% gain this year on top of like already being at record highs.
It's crazy.
It is incredible.
Yeah.
But it also kind of makes you nervous, right? Like, is this too good to be true? Is this, are things about to take a nosedive?
It is a feeling that a lot of investors are grappling with right now.
Right.
That excitement mixed with a healthy dose of caution.
Yeah.
Especially when you see some of those valuations on stocks right now, they're sky high.
Exactly.
Yeah.
And with a new president in office,
exactly.
Who knows what kind of policy curveballs are coming our way. So for this deep dive, we're turning to the OG of investing.
Yes.
The man who's weathered countless market storms.
He's seen it all.
Warren Buffett.
Warren Buffett, yep.
The Oracle of Omaha.
He's not just a billionaire. He's built a track record. Yeah. That's almost mythical.
Led almost 20% annual growth for Berkshire Hathaway over almost 6 decades.
Yeah, it's unbelievable.
That's nearly double what the S&P 500 has done.
Almost double, yeah.
So
it's incredible.
He clearly knows a thing or two.
For sure.
And we've got this article from the Motley Fool. They're a pretty reputable financial bunch.
Yeah, they are.
And it breaks down Buffett's advice for people feeling exactly like we are, a bit hesitant about diving headfirst into this market.
Yeah. Are we going to jump in or not?
Right. Feel that. So the Motley Fool piece kind of sets the scene really well.
Yeah, they do.
We've got the AI boom pushing things upwards.
Obviously huge right now.
Plus the Fed cutting interest rates.
Right.
Which usually gives the economy a little boost.
Yeah. That usually gives things a little pep in their step.
Right, because lower interest rates means companies can borrow money more cheaply.
Yeah.
Use it to expand. And theoretically, their stocks go up.
Makes sense.
But even with all that good news, there's this nagging feeling that things are a bit too hot right now.
A little too hot.
Yeah.
Yeah, and that's where Buffett's wisdom comes in.
Right.
And what's fascinating is that he's not panicking.
Okay.
He actually believes American businesses are fundamentally strong, even if their performance can be unpredictable in the short term.
So he's basically saying, don't get spooked by the daily ups and downs.
Don't sweat the small stuff.
Right.
He's all about the long game.
Okay.
And his vehicle of choice for riding out those market fluctuations, S&P 500 index funds.
Interesting.
Yeah.
So not trying to pick the next hot stock?
Nope.
Just betting on the overall success of the American economy?
That's the essence of it.
Okay.
And what I find particularly compelling is that he doesn't just talk the talk.
Right.
He walks the walk. Buffett himself invests in these index funds. We're talking about the SPDR S&P 500 ETF Trust.
Okay.
Ticker symbol SPY.
Okay.
And the Vanguard S&P 500 ETF.
Got it.
Ticker symbol VOO.
VO.
They're both in his portfolio.
Wow.
He even recommends them for estate planning.
Okay.
Now, if that doesn't show confidence, I don't know what does.
That's a pretty strong endorsement.
Yeah.
Coming from the Oracle of Omaha himself.
It is.
But let's break this down a bit more.
Yeah.
Why are these index funds such a cornerstone of his strategy?
Yeah.
And more importantly, why should we care?
Right. Why is this relevant to me and my money?
Yeah.
Exactly. So it all kind of boils down to this belief he has in the resilience of American businesses, even with their inherent unpredictability.
Right.
He sees them as a powerful engine for growth.
Yeah.
Over the long haul.
So it's not just about picking winners and losers.
Right.
It's about riding the wave of overall progress.
Exactly.
Yeah.
And that's where index funds come in. They offer a way to tap into that growth without needing to be a stock-picking savant.
Right.
By investing in an S&P 500 index fund, you're essentially buying a tiny piece of all those top companies getting instant diversification.
Makes sense. But I'm also thinking about what you mentioned earlier.
Sure.
Those high valuations that we're seeing right now.
Yeah.
Doesn't that make it riskier to jump in, even with an index fund?
That's a great question.
Yeah.
And it highlights why understanding Buffett's long-term perspective is so crucial.
Okay.
He's seen countless market cycles, periods of boom and bust.
Right.
And what he learned is that over time, the S&P 500 has consistently trended upwards.
So even if there's a dip or a correction
in
the short term,
history
history suggests it'll eventually recover.
That's the idea.
Okay.
Now, I'm not saying there are no risks involved.
Right.
No investment is completely foolproof.
Of course.
But if you zoom out and look at the bigger picture, the S&P 500 has delivered an average annualized return of about 10% since its inception.
Wow.
That's pretty compelling evidence for its long-term potential.
So it's about trusting in the overall trajectory.
Yeah.
Rather than getting fixated on the day-to-day noise.
Precisely.
Got it.
And that's a powerful mindset shift.
Yeah.
Especially when things feel uncertain.
For sure.
Oh.
All right, so let's talk about those specific index funds.
Yeah, let's get into the weeds.
That Buffett holds.
Uh-huh.
SPY and VOO.
Okay.
What makes them stand out from the crowd?
Well, both are designed to track the performance of the S&P 500 as closely as possible.
Okay.
Think of them like mirrors reflecting the movements of that index.
Got it.
SPY, the SPDR S&P 500 ETF Trust, is actually the first ETF ever listed in the U.S.
Wow.
Talk about being ahead of the curve.
Really? A pioneer?
Yeah.
So what about VOO, the Vanguard S&P 500 ETF?
So VOO is similar to SPY in that it also tracks the S&P 500.
Okay.
But it boasts a slightly lower expense ratio.
Oh.
We're talking minuscule fees. But over decades of investing, those small differences can add up.
So for someone who's new to this,
Uh-huh.
it almost seems like a no-brainer.
Right.
Just pick one of these index funds, sit back, and let the magic of compounding do its thing.
It's definitely tempting
Yeah.
to simplify it that way. And for many investors, that approach can be incredibly effective. But it's crucial to remember that no single investment strategy is universally perfect.
Okay, so what are some of the nuances or potential downsides we should be aware of?
Sure.
I mean, even Buffett wouldn't recommend something
Right.
without acknowledging its limitations, right?
Exactly. One key consideration is tracking error.
Tracking error.
So while SPY and VOO are designed to mirror the S&P 500, there can be slight deviations in their performance.
Wait, so even though they hold the same stocks,
Right.
they might not move in perfect lockstep with the index.
Right. They might not perfectly mirror.
Why is that?
There are a few reasons.
Okay.
It could be due to timing differences in buying and selling securities,
Okay.
slight variations in how dividends are handled, or even just the tiny costs associated with managing the fund itself.
Oh, okay.
Yeah.
So how much should we worry about tracking error when choosing an index fund?
It's certainly something to be aware of.
Okay.
But for highly liquid and well-established funds like SPY and VOO, the tracking error is usually minimal.
Okay.
Still, it highlights the importance of doing your due diligence before investing in any fund.
Right.
Look at its historical performance.
Okay.
Compare expense ratios and make sure you're comfortable with its overall track record.
So even within the world of index funds, there's some research involved.
Absolutely.
Okay.
But it's worth taking the time to understand the nuances.
Yeah.
Because remember, this is about aligning your investments with your long-term goals and risk tolerance.
Got it. So let's say someone's feeling inspired by Buffett's approach and wants to explore these index funds further.
Yeah.
Where would they even begin?
The good news is ETFs like SPY and VOO are traded on stock exchanges.
Okay.
Just like individual stocks.
Interesting.
You can buy and sell them through a regular brokerage account, which most online platforms offer these days.
Yeah.
It's very accessible.
That's great to hear.
Yeah.
It makes the idea of dipping your toes into the market
Right.
less daunting.
Exactly.
Yeah.
And remember, even if you're not ready to become like a full-fledged stock picker, index funds offer a way to participate in the market's growth potential.
Right.
Without needing to become a financial expert overnight.
It feels like Buffett's almost offering a permission slip.
Right.
To be a little less stressed about investing.
Yeah.
Even when things feel uncertain.
Exactly.
Just focus on the long game.
Long game.
Diversify.
Diversification.
And trust in the resilience of the market.
Absolutely, you nailed it.
So we've uncovered the why behind Buffett's love for index funds. Explored their nuances. And even demystify how to get started. What's the key takeaway you want our listener to walk away with today?
Okay. Well, I think like the biggest takeaway for me is that you don't have to be a financial wizard to invest wisely. Buffett's approach is surprisingly simple. Even for someone of his stature.
Absolutely. But I'm also kind of curious. We've focused a lot on the cautious investor angle.
Right.
Which makes sense given like the market conditions.
Of course,
But what about those who are feeling a bit more adventurous.
Yeah.
Maybe even a little FOMO. Fear of missing out.
Right.
Seeing these big gains.
That's a great point.
Yeah.
Not everyone is wired for the slow and steady approach. But some folks thrive on, digging deep.
Yeah.
Researching individual companies and taking calculated risks.
Yeah.
And you know what? Buffett's got some wisdom for them, too.
Oh, really?
Yeah.
So index funds aren't the end-all, be-all?
Not necessarily.
Of his investing philosophy?
He's a big believer in value investing.
Value investing.
Which means identifying companies that are undervalued by the market. Ones with solid fundamentals and growth potential that maybe others haven't fully recognized yet.
So it's less about following the herd and more about doing your own homework.
Exactly.
Finding those hidden gems.
Right. It requires a different mindset.
Yeah.
A willingness to be patient and contrarian.
Yeah.
But the potential rewards can be significant if you're right.
Right.
Of course, it also comes with more risk.
Of course, because you're taking a more concentrated bet on specific companies.
Exactly.
Rather than spreading your risk across the entire market.
Precisely.
Right.
And that's why it's crucial to understand your own risk tolerance and investing style.
Right.
Are you comfortable with potential volatility? Or do you prefer a more hands-off approach?
This whole conversation has been eye-opening.
Good. I'm glad.
Even if someone decides that index funds aren't their jam. Just understanding the logic behind Buffett's approach.
Yeah.
Whether it's the long-term perspective, the focus on fundamentals, or the willingness to be patient.
Absolutely.
Those are invaluable lessons.
They are.
No matter what your investing style is.
Couldn't agree more.
It's about developing a framework for making informed decisions.
Yeah.
Not just blindly following someone else's playbook.
Exactly. Make it your own.
Okay, so as we wrap up, I want to leave our listener with a final thought to ponder.
Okay.
We've talked a lot about what to invest in, but what about the when?
The eternal question of timing.
Yeah, timing the market is notoriously tricky.
Oh, yeah.
Even for seasoned pros.
Absolutely.
So how does Buffett approach that age-old dilemma?
Right.
Does he try to predict the perfect moment to buy or sell?
That's an intriguing question.
Yeah.
And one that deserves its own deep dive.
Right.
But I'll give you a hint. Remember his long-term focus. Think about how that might influence his decisions about when to enter or exit the market.
Ooh, that's definitely something to think about.
Lots to ponder.
All right, folks, we've covered a lot of ground today.
We have.
But remember, this is just the beginning of your investing journey.
It is.
Keep learning.
Keep learning.
Keep exploring. And most importantly, stay curious.
Absolutely.
All right. Thanks for joining us for this deep dive.
It's been a pleasure.
We'll see you next time.
See you later.